right, everybody. Welcome back into another episode of the Seven Figures or Bust podcast. This is episode 116, the number one podcast in the world for growing your insurance business. Christian Brindle, Glenn Shelton, as always. And we've reached the end of the week. Great week of pods.
End of the week. Yes.
I mean, end of the week in terms of pods, right? Not
end of the week in term of the week. It's Friday, everybody.
We had some doozies of episodes this week, right?
Great episodes.
Many great topics, really good things discussed. And I don't think there's any reason today will be any different. Talking about final expense sales, kind of talking about that a little bit. It kind of dawned on us that we really haven't done too much content featured around final expense. So that's what today will be about. Before we get into that, though, I wanted to kind of start something off with the show. So I gave Glenn a warning that this might be a bit of a controversial place I want to go this morning.
I have no idea. For the record, I have no idea what's about to come out of his mouth. All I know is I was told to put my seatbelt on. If you're driving and listening to this, you might want to pull over. I don't really know, so here we go.
So I've always considered myself, especially as I've gotten older, a little bit of a business philosopher of sorts.
Philosopher. What a start here. Socrates. I think Socrates, tell me what you're thinking.
Man is inherently good. No,
the sun goes around the earth. The earth is the center of the universe.
No, but so I think about things sometimes very deeply, you know, and
oh my god.
I'm gonna need you to go through a little bit of a journey with me through this before you react.
Okay.
Because I'm going to get to an actual question with this.
Okay.
That to me is interesting. It might be, I don't know, offensive to some. I'm hopefully not. But lately I've been listening to a lot of like tidbits on JFK. Now, when I first say JFK, people automatically think, you know, oh, you've been looking into the conspiracy theories when it comes to the assassination. Oh, you've been looking into was he a good president? You know, was he a beloved president? Blah, blah, blah. None of that. None of that. More so, what's kind of fascinated me about good old JFK was his personal life. I learned a ton lately on his personal life, like watching documentaries, listening to, you know, different tidbits about his life. So, you know, I never knew how layered his personal life was. You know, he had a lot of health problems from a very young age that he kind of did a really good job keeping hidden. You know, the Kennedys grew up in a really wealthy family. They're almost like groomed to be politicians,
right,
by their parents. And for all intents and purposes, JFK was a total piece of shit in his personal life. You know,
hot take
when he was in office, he had a doctor that had a nickname of Dr. Feelgood that would travel with him everywhere and conduct cocktails of amphetamines, like all kinds of shit, right? And he was famous for saying, you know, I don't care if it's a cup of piss, it works for me, and I'm gonna keep doing it. And all his advisors are like horrified by this doctor. They're like, get this guy the fuck out of here. This guy's like a certified drug dealer. You know, famously, the Marilyn Monroe thing. I mean, I watched an entire documentary about that. That one, I feel confident in saying that certifiably happened. You know, that whole kind of thing, the affair there, everything like that. I heard a story where his wife is on the brink of giving birth, his wife Jackie, and he goes on vacation without her, leaves her home, goes on a yacht, with like bikini babes and everything like that on the yacht.
He's like, this is too stressful for me. I'm leaving. I'm leaving.
Wife goes into labor. And from my understanding, the baby dies during labor, something like that.
Oh.
He gets a call from Bobby, RFK Jr.'s papa, and while he's on the yacht, and he's like, what do I care? The baby's dead anyway. Can't bring it back. I'm not cutting my vacation short. And so he stays for like a week.
Wow. So I've never heard that story before.
So here's where I'm going with this, right?
Yes. Let's see where do we end up at the bottom of this rabbit hole?
It's kind of talked about a lot, like to become a person of influence, to become a person of massive success, which I don't think you can say anybody that's become the president of the United States has not achieved massive success, right? Very small amount of people ever accomplished that feat.
True.
Is it inherently important to have a stabilized life and morality to become massively successful, or is that a myth?
I think the most interesting part about this whole topic is Elon Musk has been front and center in the media lately, and really a lot of the same thing has been questioned about drug use and his personal life and his, baby mamas, who apparently he's got like 15 or more of. There's speculation that there's even more that we have no idea about. And all of these things where, some people try to draw the question of, does this take away from his success, essentially, if he is kind of off the deep end? I think when you're that far down the road, you're probably, I can't even begin to speculate or even empathize with like what someone like Elon Musk could possibly be going through. Right. And I'm sure
on a day-to-day basis.
Right. That's what I was saying. And I think it's almost a direct analogy to everything you were just talking about with Kennedy. I really think how can you even begin to empathize or speculate with what they're going through and how they got to the places that, the decisions they made that took them on some of these different routes. The morality conversation, that could be a whole topic in and of itself. Yeah, that's a whole in and of itself.
Because this is what makes me wonder about it, right? Like there's always this picture perfect kind of viewpoint of someone that is successful, right? They're a good family man. They're good. They give to charity, da 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 da. And of course, like I think as human beings, we're inherently flawed. Everybody's probably aware of that. But I think we're always kind of raised and grown up to believe that if you live a life, like you take JFK, right? Drug addict from all intents and purposes, adulterer, bad husband.
But isn't it interesting that that's not the story that's like told about him? Like you think JFK, you think assassination, you think we got to the moon underneath him, the whole NASA program. Like,
yes,
you think about all of, you think about some of the great speeches he gave. It's like, it's almost like his story got written in a lot of ways differently than what it actually was.
And edited out the unpleasant parts. Yeah.
Yeah.
And there's a lot of people like that in history. I'm just kind of picking on JFK a little bit, but
stop picking on him.
But I feel like from the time we are born, raised up to believe that if you go down this morally questionable road, that you will end up unsuccessful in life. And for a lot of people, I think a huge amount of people, that's the case, right? People, drug addicts, homeless people, like
right.
But then there's also these people that really, from all intents and purposes, from the majority of their lives, like JFK lived a very morally questionable life in many ways, his whole life. And he becomes the president. He's one of the most talked about presidents ever, even today. Probably partially because of the assassination, right? And the whole, conspiracies surrounding it.
Who did it? Yeah.
Who did it?
Who did it? It was Andrew Lee.
Was really Jack Ruby.
Jack Ruby.
No, but anyway, it's just something I had a thought about, and I'm like, does none of that matter? Does none of that matter? Or are some people just so uniquely in the right position at the right time, or uniquely talented to overcome those things?
I wouldn't say it doesn't matter, but I think there is a childlike approach to this idea that, like, you do good things happen to you, because
right.
And like, part of me has always wished that it was that simple, that it's just like, if you're a nice person, you do nice things, like you were saying earlier, like all these morally good things, that you're going to really win on the other end of it. But the reality is, it's a mixed bag. You could be a total asshole, be a horrible person, do all the wrong things, and sometimes those people end up on the top of the mountain. It's crazy. It really is.
One of the wildest things that I learned about JFK, and I don't know if this is inherently fact, but it seems like it is. It seems like it's put into like the biographies and stuff like that. So his wife Jackie, she's aware of all these adulterous acts. So when he's killed in the hospital, he's on the metal, table, his body, that she kissed him in a very intimate place, as like a symbolism of like, I'm the last one to touch this. Oh yeah.
Okay. Signing off here. Guys, I hope you enjoyed today, episode 116 of Seven Figures or Bust Podcast.
And I'm like, what?
I don't know what this podcast is about anymore, to be honest. I was like, this wasn't too bad. We made it out of the woods here. And then, right at the end, you just rip the pin on the grenade. There we go. All right. We're going to come back to reality now for a second.
Okay.
I'm going to... Okay.
I can't.
I have something topically relevant I wanted to share this morning, guys.
Steer us back.
Please. I can't believe you. Okay. What am I doing with my life? Okay. We spent a lot of time, I believe it was last week.
Yeah, probably.
I think it was last
Who knows?
We were talking about...
I'm pulling myself together.
We were talking about the agency taking over someo's agency for them, right? Yes. Like, if they don't have a succession plan, succession plan. I just saw a post, I think it was yesterday, in one of the Facebook groups.
Yes.
And it seemed like a succession. It was one of these types it looked very unique. I don't have all the information. But basically, from what I'm understanding, is that there's a younger, smaller agency that an agent's running.
Yes. And I'm sorry, I'm listening. I'm listening. Continue.
They are creating an agreement with an older agency that's much bigger, where they are going to merge, and in about 3 years' time, they're going to take over the combined entity.
Oh, interesting. So let me make sure I got it right. So
yeah.
Newer agent, right? Newer agency, and an established agency, basically over 3 years of time. That's super interesting.
It's kind of a reverse merger in a lot of ways, when you think about it, because the smaller agency is essentially taking over. I don't have the details on how this agreement or this merger acquisition deal is going to work for this smaller agency. My assumption would be that there's some type of payment, because again, if you can't get the funding and you're a smaller agency like this, it's probably some type of like seller finance deal where they're merging together. The original owner of the bigger agency is probably getting sunset pay. There's some sort of payment system, I'm assuming, probably happening. Whether that stops after 3 years, maybe it goes beyond 3 years, I don't know. But I thought for that smaller agency, what a move, right? I mean,
that's kind of
I don't,
that unicorn situation we were talking about the other day. And part of me wonders, I didn't see the post. So I don't know any more details that might have been shared, but I'm wondering if this is something that newer agent went out and found in the way that we were talking about, or it was established relationship, somebody that they've known through either family friend, family member, close friend, something like that.
I'll try to see if I can find the post. There wasn't a lot of information about the actual deal itself or the history of the deal, but it was mainly about how I think part of the reason the person posted about it is I think there's this whole question about upline, because you got two completely different uplines. You have the upline of the bigger agency and the upline. So it kind of becomes this thing of like, where do you place your contracts? I guess was part of this whole question that was being posed, because you've got options essentially.
That is very interesting. And it goes to show to me, kind of expanding on that conversation from that other episode, that there's not one way to structure these types of deals.
Right.
And it is so uniquely dependent on the circumstances of the situation of you and maybe that bigger agency that you want to take over. But man, what a timely example of what could be possible if you're looking for those opportunities early on. Something that, like I said on that show, I would have even thought of even pursuing that or even looking for that. For all I know, there might have been opportunities that might have presented themselves that I just wasn't
not ready for, not
ready for it, not mature enough in life, business, whatever you want to say, right? To really identify, perhaps not savvy enough. So yeah, I think that's that's a tremendous example of just a fantastic opportunity and a way to really limit a failure rate for that newer agent from the sounds of it.
Yeah, I mean, so there's not really a lot more information. I found the original post I was looking for. There's really not much more on there, but I do think there's something to be said about you're only limited by the creativity of these types of deals. I think that it's really, here's a situation where you're solving a problem that, as a growing agency they have, right? You're trying to grow, you're trying to take on more clients, get more beneficiaries on the books. And then you have this bigger, older agency where, they want to make sure their clients are taken care of, they're maintained. I mean, Christian and I have bought several books of businesses, and when we're talking to some of these agency owners, it's a big deal. It's a big deal to them that they want to make sure that their clients get taken care of. They've been doing this for 5, 10, 15, 20 years, 30 years. They've really have a reputation in place. They don't want to just sell out and disappear and get the money and run. They also want to make sure their book gets taken care of, So I think that's what I love about deals like this is, everyone wins. Everyone can have a winning solution. So,
yeah, I love it.
Yeah.
I love it.
Yeah.
And I don't know all the details, right? But from just the sounds of it, based on what we know, props to that agent for being able to position themselves in that situation to, there are some agents that, depending on how big that established agency is, let's just hypothetically say, for the sake of example, there's 1,000 clients there. It might take a lot of agents or agencies a decade to grow to that size. Some agencies may never grow to that size. And so that's a power move in every sense of the word, in my opinion.
What would you say the average agency that's been in business for 10 plus years, what do you think the average book size looks like if they've been doing it for a decade?
It's so hard for me to say because, I mean, both of us have worked with agents and agency owners of all different sizes countless times. We've seen so many different circumstances. I've seen people that have been doing it 10 years that have 2,000 to 3,000 clients. I've seen some that have 5,000 clients. I've seen some that have 8 to 10. Very few of those.
I guess it's a total loaded question, to be honest.
I've also seen some that have 300 to 500 after 10 years.
Yeah, true.
You know, so I don't know, I guess is my question. I think there's probably a lot more that are going to range between 300 to 700 than ones that break 1,000. I'd say it's probably 80% of those are under 1,000.
Let me ask you the same question in a different way. If you have more than 1,000 clients on the books active, what percentage would that put you in, you think, of like total agencies out there? Are you in the top 5%?
I would say you have to be in the top 1.
Top 1%, probably, right?
Yeah, you have to be.
Yeah.
Because again, right, we've talked about this on the show, and it might sound crazy, but the vast majority of agents or agencies will never have 1,000 clients.
Right.
You know, I've known people that have done this for 25 or 30 years that never get 1,000 clients. And a lot of it is not necessarily that they couldn't have, but that they get to a comfortable place and then they just chill. And they just never actually
retention, referrals. They're not really pushing. Yeah.
They don't put their foot on the gas to push forward for what's possible. And that's probably the largest reason as to why. It's not that they couldn't have done it. You know, it's that they have decided inherently that I just want to be happy.
Right.
You know, they think that by continuing to grow their business, they have to give up their business. And I think that's a common
huge
limiting
myth.
belief that people have. But yeah, totally, I mean, there's a lot of people that think that way, and it's just twisted to me. But it's probably why they'll never be successful. They'll never be ultra successful. They will never be more than mildly successful. And that's okay if that's what they want. I'm not trying to shit all over those people. I know there's a lot of them, but
self-awareness.
Yeah. We talked about it before.
Knowing what you want. Yeah.
Right. Like, it's not my truth. It's not what I want. I know it's not what you want. It's not your truth. You know, both of us want to land on the moon before Russia kind of mentality, JFK. Head of NASA was a Nazi.
Oh my God. I gotta get off the stream as quickly
as Did you know that? The head of NASA was a Nazi?
Yes. You talking about Kubrick or whatever his name is?
I think that's his name. Yeah. I didn't know that until like the last year in my
Wasn't he the director of The Shining as well?
I think so, or he was like heavily involved.
So weird. Operation Paperclip, right?
Yeah.
Operation Paperclip, right? Yeah. I know what's going on here. All right. So before we let Christian, we're probably going to have to put a ban on Christian talking about history for a little while after today. But guys, today's podcast, episode 116 of the 7 Figures or Bust podcast, is brought to you by none other than Lead Heroes, your number one insurance lead provider here in the senior insurance market. At Lead Heroes, you can get an exclusive real-time verified lead where someone from our team just spoke to this prospect within the last 12 to 24 hours. You'll get a copy of that phone call along with all of those original data points. It is essentially a double verified lead. They submitted an information request. We are contacting them, verifying that information request, and now we are passing that prospect along to you. If you are looking for more seniors who are in the turning 65 market, the Medicare supplement market, or the final expense market, also, we just launched dental vision hearing leads this year, which have been a fantastic low-cost solution for agents to continue to write business even here during the off season. Do not wait. Do not wait. Head over to leadheroes.com. That's leadheroes.com. Right meow and pick up your leads today. You froze there for a second.
Did I freeze? Yeah. Am I back?
Yeah, you're back.
Okay, good deal. Didn't hear the last 10 seconds of that, but I would agree with everything that was said.
It's all true.
Okay, let's pivot into final expense, shall we?
Yeah.
I'll start off by kind of saying, I am primarily a Medicare guy. Medicare is my bread and butter. It's something that I feel like I'm as good as anyone that there is in that regard. Final expense, not as much, but it's something that we're integrating into the agency. We're starting to do more of. We're building it into our processes. And this year, I've learned more about final expense than I probably ever knew before that, right? In terms of just the intricacies of the sales process, cross-selling it, in a effective, compliant way with Medicare clients and everything like that. And so, yeah, I want to kind of take it from that perspective. Glenn is far more of a final expense aficionado than I have. He sold a lot more final expense as an agent than I ever did. I sold some. So I'm going to let you lead this conversation because I feel like it's more your wheelhouse than mine.
Well, the first thing I really wanted to do today was talk about what final expense is for new agents who might be finding this, watching this, listening to this. Final expense, which, you'll hear a few different names for what this is: burial insurance, final expense insurance, funeral insurance. There's some different terminology around this, but what this essentially is, it's a simplified issue whole life policy. So this is a policy that's designed to pay for end of life expenses. So this would be for the casket, the plot at the funeral home. This is for the thing is, like, everyone has a different idea of what their funeral looks like. And a lot of times your family's going to plan your funeral for you if you don't plan all of those details out. So there could be all sorts of things that you're not thinking about when it comes to the cost of a funeral. You have, there could be a hearse. You might have, again, some people have bigger funerals, right? I mean, I've been to a few different funerals. Sometimes there's a catered event, right? There's like a wake that happens afterwards. So it's not crazy to say that you could have a funeral that could easily cost 20 to 25 grand. And the last thing, and again, when you're talking to a senior, especially, like, the last thing you want your loved ones thinking about is, here's the funeral that I think Glenn would have really wanted. Here is the cost of that funeral. We can't afford to give Glenn the funeral he wants, so we're just going to have to cremate him and put him in the ground, or cremate him and put him on a shelf in our house. or they do pay for the funeral and they can't, now they're in debt, right? They're paying for it with money they essentially don't have. This type of insurance policy is designed to come in and kind of fill in the gap, right? That this is the type of protection where the senior doesn't have assets or any other type of life insurance. So this final expense policy comes in and saves the day, essentially. And I, believe it or not, I've heard from so many people how grateful they were. There's some people, we went through the Reddit post the other day about agents, and specifically there were some talking about final expense, and they were like, this is just the poor getting more poor, and final expense is such a ripoff. And yeah, there are some people out there who think that way. There's some prospects who think that way. There's some agents out there who think that way. But the reality is that it is a niche that serves a very big purpose. You just have to really understand it and see it. So I wanted to kind of like pull back and give a high level overview before we got too deep. What do you think of that? With hundreds of insurance agents and agency owners at the event, this could not be a better opportunity to spotlight your business. If you're looking for a sponsorship opportunity and where to spend your sponsorship dollars this year, the 7-Figure Medicare Agent Summit is the spot to do it. You can have your own booth. You can network with agents. This is the 4th annual summit, so there's going to be a lot of agents there and a lot of agents who are looking for help from vendors for leads, educational vendors. You could have a software tool. There's so many great vendors that we've had in the past, and we're looking at a lot of great opportunities for businesses to sponsor at the 7-Figure Medicare Agent Summit. So if you are looking for a sponsorship opportunity, make sure to check out 7figuresmedicareagentsummit.com.
Get your tickets today while they're still available, and reach out about sponsorship opportunities. We'd love to have you involved with the 7-Figure Medicare Agent Summit in 2025. Now back to the show. Yeah, so I was definitely probably for a long time one of those people that had that viewpoint, that not that the poor get poorer and the rich get. I've never been that guy.
Yeah.
I'm
for sure
pro capitalism. I am pro market value. Blah blah blah. Yeah, all of that stuff. But I think my viewpoint on it was final expense for the what the person pays for it. Oftentimes, it might be underwhelming of the coverage that's provided, right?
Sure.
Like that's a
real thing. Yeah, that's a real thing.
It's very common that someone can pay $40, $50, $60 a month and get $10,000 of coverage. And you're like, okay, I'm spending $500-$600 a year in premium over 10 years. I'm almost to my death benefit, that kind of thing in what I've paid out. Here's the thing though, and people do this with some types of insurance and they don't do it with others. It's like, will it pay out more than what I pay into it? People do this with dental insurance too, but they don't do it with health insurance. They don't do it with car insurance. If you look statistically, not all, but there's a lot of type of insurance policies that people just kind of systematically accept that is necessary, that on average, the vast majority of people will pay more in premiums than it will pay out in a year, right? I think car insurance is a great example to that, right? Like in car insurance, you really get punished the more you use it. Like your premiums go up. If you use it way too much, you might not even be able to be insurable in some cases, right? Like, so you are really, it's in your best interest to use it as little as possible. So it's very common. Like my car insurance right now, for example, I want to say just for my wife's car, we're paying $150 a month. For my car, it's like $280, something like that. So together we're paying $430, I want to say something similar along those lines.
Right.
So I'm paying $5,500, $6,000 a year somewhere in there in premium. we're halfway through the year. We haven't filed a claim. I'm not planning to file a claim. Fingers crossed. And so is that just premium that's just wasted?
Wasted money.
Well, no, because number one, legally I have to have it.
Legally, yeah. I'm like, legally you have to.
But I can't drive without it. But let's take that out of the picture.
Right.
You know, it covers me for the unforeseen, for the unknown. And that's what insurance inherently does. It covers the unknown, right? So like dental, you might not have a crown done every year, but if you have, let's say, a year that comes up that you need 3 crowns done in a root canal, you'll be glad you had dental insurance, right?
Right.
And same goes with this, right? It's definitely rolling the dice. There will be people that don't use a final expense plan over 10 years, and there will be people that do, and you just don't know which one you're going to be. And so it's just the overall philosophy of insurance being protected from the unknown. And, Glenn brought up a good point. When we first merged our companies, I was like, the biggest objection I've ever gotten when I've tried to sell final expense is, because it's not my wheelhouse, right? I've probably sold 10 policies ever personally. But the biggest objection I ever got with final expense was I could just put that money aside and save it up and I'd have the same money or blah, blah, blah.
Right.
But the answer that you gave is so true, but you won't. And if you would, you would have, and you would have that now, you know? So I think that's the overall arc of it. It's just protecting from the unknown. And why is it any different than any other type of insurance? Most insurance, you'll pay out more in premium than you pay in, but when you do have to use it, you're so glad you have it.
Yeah, that's a really common objection. And part of the problem and part of the reason why that objection is so common is the older someone is, the less value they might see in that policy because of that dollar exchange rate, the cost of the death benefit, right? Yeah. If you're 55 years old, you're in relatively good health, the cost of that death benefit's pretty low. You can get a nice fat final expense policy, 20 or 30K, and it's not going to cost you that much. We don't need to get into exact quotations right now, but when you get into that higher age bracket and you're sitting down with Mrs. Jones and she's 74 and she smokes a pack a day, and you're trying to get her a policy and you're quoting something out for her, and it's, a $5,000 burial benefit for $45 a month because that's all she can afford, and she's really hemming and hawing because it's like, well, what is that even really going to get me for $5,000? Is that really enough? So, and yeah, there is a couple different ways of kind of navigating that. One is telling them just straight up, hey, like, you didn't save before, you're not going to save now, and not to mention, even if you committed to saving, that doesn't help you if you pass away next month. This is like a savings account where you're guaranteed that money pays out if something were to happen to you. So that's important.
I have 2 questions for you related to this. So number one, do you feel like final expense is a better product for younger people than seniors? Question number one. And number two, how much more assertive and aggressive, most likely, do you have to be a proficient final expense agent versus maybe Medicare or other types of insurance?
So I wouldn't say final expense is something that like a 30, 40, 50-year-old necessarily needs to have. I mean, we could get a true like life insurance expert, a career life insurance agent. Like if we had someone on the podcast right now and they had been selling for New York Life for 30 years and like all they sold was life insurance, what they would probably tell you is you should have gotten a whole life policy when you're 20 years old that you can borrow against, and it'll be fully paid up when you're 65, and then you wouldn't need final expense. Obviously, right? There's so many different reasons why someone could get either a life insurance policy earlier in life, or they've amassed enough assets, or another one that you'll come across is some people go down to the funeral home, they just prepay for all of it. And then you're trying to talk to them about their final expenses, and they're like, I already prepaid for everything. I went down to the funeral home, told them everything I wanted, wrote the check, handed it to them, and I'm done. Like, I don't need to talk to you about this. So there's many reasons why final expense might not be a fit, but final expense in and of itself is geared towards, I do think it's a senior product. It's just, if someone, you get into these older age brackets, you hit 75, 80, 85, some people still really want it, but it's just the cost analysis of it can be a lot tougher. Now, the second part of your question, the aggressiveness of it, I think it is a much, much more sales related position that we're talking about here. Like, you really need to have some salesmanship at times to explain the value of this, because a lot of people, just like we mentioned a moment ago, a lot of them just won't see the value. So sometimes you have to really paint the picture. Christian said on the pod before, and I loved it, is you really have to put them in the ground. And it's not a comfortable conversation to have a lot of times. Sometimes it's easy to have. Sometimes they're really open to it, but other times they don't want to talk about it. Or, their family's there, their spouse is there, and you're like, well, Mrs. Jones, Mr. Jones, what happens when one of you dies? Mr. Jones, do you have anything right now? Like, how would the funeral be paid for? Well, what about any other final expenses that maybe you're not thinking of? Do you have any, debt that's not going to be taken care of when you pass away? I mean, there's whatever, etc. Right? The meat part with a final expense policy and not prepaying like the funeral home is that's a tax-free check that goes to your beneficiary, right? So they're literally going to just get a check in the mail from the insurance company, and your beneficiary gets to decide what they want to do with that money. Maybe they want to go travel the world. Maybe they whatever, they get to do whatever they want with that money. So I think a lot of people will get lost in, if you're coming from it from the health side, health everyone has. It's easy to talk about. It's like car insurance. You can even get penalized for not having health insurance, right? So it's like, it's a really easy conversation on the life side, because in a lot of ways it's a premium to have. Like it's something that not everyone has, and it's not something that's required to have. There's definitely some salesmanship involved for sure. It's a harder sale.
Yeah. I think another thing that is important to think about too, because I asked the question about younger people getting it because the premiums are lower. That's one thing that people think about sometimes. But that being said, seniors have a lower mortality rate. They just have less time left, right?
Yeah.
Their time period, their likelihood of passing away in 10 years or 15 years is much greater on average than somebody that's 40 or 50, right? That's just a statistical fact. That's why the prices are more. The risk is greater for the carrier. And so that's, I think, a good explanation for the client as well, potentially, right? Like, when you're over Medicare, the risk is greater to the insurance company. We do recommend having this because of just the unknown. It provides peace of mind, security blanket for your family, that type of thing. And, I've had a lot of people push back against me about the prices and the premiums. Well, if I paid it over this long, blah, blah, blah. I'm like, yeah, I think it's, I think it's one of those things where if you keep any type of insurance long enough, or a lot of different types of insurance long enough, you'll pay out more for it than it'll pay out for you potentially, but you get insurance for the risk of the unknown. And that's what this is for. It protects you, it protects your family, that type of thing. Let's talk. Oh, go ahead. I'm sorry.
There's a comment here on the show. And again, guys, if you comment on any of our pods this week that we've done here in the 7-Figure Medicare Agent Facebook group, one comment gets you one entry into Freebie Friday, which is happening tomorrow. I don't even know what we're giving away this week. Christian, what are we giving away this week? Should we give away final expense leads?
We could do that. We could give away Summit recording
Ooh, summit recording. We'll figure it out. We'll have something great, as always, every Friday. So comment below. Tell us hello. Ask a question. Tell us how amazing we are. We love those. We love the compliments, you guys. Keep them coming.
That's right. I can never get enough of that, to be honest. So please keep it coming.
There's a mention of probate here, which is a really great point. And another reason why I think it's another great value add to getting life insurance is if you don't have a will, and your property and your assets are having to go through probate court and they're trying to figure out, who's in charge of the estate. Estate taxes, a lot of times it's close to like 50%. So you're talking about losing half of your assets going through. So not to mention that can take a lot of time as well. So even if you do have some assets and you're like, well, do I really need final expense? You're going to lose some to the tax man. It's going to take time before that gets to your beneficiary's hands. Whereas, a check a lot of times, from what I've been told, is typically like 30 days or less after someone passes away. They can have that claim in their hands. So, that's a great point. But anyways, what were you going to say though, Mr. Brindle?
I was going to say, like, one thing that comes up all the time, right, is like how to combat some of the mainstream final expense policies that maybe you as an agent won't sell, right? Like, for example, the Colonial Penn $9.99 life insurance policy, right? $10 per $1,000 of coverage, which they never understand is such a ripoff. And a lot of these ones that are sold on TV and things like that. Why don't we dive into that a little bit about, like, because the policies that most likely you're going to sell as an agent are going to be first day coverage, no waiting periods.
A lot. Yeah.
A lot of the policies that might be advertised to the client at a low cost, maybe they're being offered it from their bank or something, accidental death and dismemberment, which
That's a great point.
Has such a limited scope of what can be covered. Let's dive into that a little bit, right?
Yeah.
Like, because I know, when you're out there selling final expense, you run into a lot of these things. People either have these policies or they're asking about these policies. And a lot of times these policies, not the $10 per $1,000 of coverage situation that's a ripoff, but a lot of times, it might be a lower premium than what you can offer, but it might not be the same coverage. What you're offering might be better. Talk about that a little bit.
Yeah, and honestly, I kind of 180'd on this during my career. Is like, I used to hate anytime someone mentioned anything else, but I actually completely flipped to the point where I loved when someone brought something up, because now I can latch on to a point of reference in their mind, right? Whether it's Colonial Penn, they're seeing the commercials on TV. There's that old timer, he almost looks like Colonel Sanders. Like, I can like see him in my head, like talking about it. There's carriers that will do direct mail, sign up through mail. There's carriers that will do newspaper ads, clip out this newspaper ad and send it in, and you can sign up. And here's where it gets in the nitty gritty. And I'd say of the seniors that have a policy, probably 90% don't know what they have, or they think they have something other than what they have. So trying to get your hands on the policy or calling the carrier with the senior right there in front of you so you can figure out what they have. I got many sales by doing that, by being able to say, hey, Mrs. Jones, this is an accidental death policy. You're going to have to slip off your roof and fall into a car accident to get a claim paid out on this. Like, it's not what you think it is, right? Oh, I've got $200,000 in coverage that I'm paying $20 a month for. Why would I buy this final expense policy? Because this final expense policy will pay out. Mm-hmm. As long as you keep paying the premiums, this will pay out. The policy you have right now most likely will not pay out. So, there's graded death benefit. So that, it'll pay out, but they're not getting coverage on day one, right? So they're getting a portion of it, or maybe they're only getting their premiums returned to them in the first 2 years. So that's another big misconception that a lot of these will have. So, accidental death, not covered on actual day one, graded death benefit for 2 years. And then the third one, that's a big one that you'll see, is just crazy overpriced premiums. Lincoln Heritage, shout out to Lincoln Heritage on the pod today. What I will say is they write that business, I guess they're technically a carrier and kind of a FMO all in one, really. But they write an insane amount of final expense premium. It's a simple application. I've seen the actual app. It's like a 1-page app. It's pretty much guaranteed issue. It's really easy to transact business through Lincoln Heritage, but their premiums are through the roof compared to a lot of these other carriers. And they're just one of many that fall into this category. When I used to be in the field, I'd come across policies from like Bankers Life. I think you may have already mentioned Bankers Life was really overpriced typically. Lincoln Heritage, Old American. The actual like final expense carriers that you would want to write with, a lot of times they'll be pretty competitive where it's pretty close. But then there's just like this other kind of group of carriers where their business model is essentially just to charge a lot more for that death benefit.
Right. Yeah. Yeah. I think that makes a lot of sense too. And, I think you have, it's very similar in any type of insurance where like there's a shiny object, but it, in the fine print of it, it has its limitations,
Yeah.
I remember in the med sup carrier world, kind of taking us back to, because I think med sup and final expense have a lot of similarities in the product structure, underwriting. They're very similar in that way. I mean, they obviously cover two completely different things, but they are kind of like distant cousins in a sense. A lot of carriers that offer one sometimes will offer the other, and they're very similar in their application and everything like that. But like with med sup carriers, right? Like, taking us back to where Andrew Saul came on earlier this week and talked about the lowest price plans having these crazy loss ratios, right? I know you get the same with final expense. Like you get these lower companies that throw out these low rates, and then maybe they go bankrupt, they get bought out by other companies long term and things like that. It's just this.
That's a great point.
This kind of feeling like there's no longevity in terms of quality of the company. I mean, obviously these plans, the person can't lose their coverage, but like sometimes you see this with long-term care too. Their policy gets passed around 3 or 4 times over 10 years. Different companies come in, they're like, who am I insured through? Like, and there's something to be said about a carrier, and it's the same carrier all the way around. They're a big name carrier, right? They're sustainable. They're the same product 10 years later that they bought day one, that kind of thing. And sometimes you don't need to, you talked about this a lot too. You don't need to go with the lowest price plan to get that, but you don't want an overcharged plan necessarily. That's like way too more than the market, but like maybe a mid-level plan. And that's always been my philosophy too on the med sup side as well. Like a lot of the best med sup companies to sell for in most instances, there might be kind of middle of the pack in terms of the overall rates in that market. In terms of long-term stability, if there is such a thing these days.
I had in my presentation, I actually kind of built in this thing talking about AM Best. AM Best will give life insurance companies like a financial rating. It's like a letter grade system. I want to say AA is the best. Does that ring a bell? AA, is that a thing? Am I making this up? I feel like AA.
I thought it was A++. Was like
maybe it's A. Maybe that's what it. But regardless, they have a letter ranking system based on what they're, so they're basically going in, they're looking at the books of these life insurance carriers. They're seeing what the financial stability of the carrier is, and then they're assigning a letter to them. Think about it like if you go to a restaurant and the city has like a grade of like cleanliness for the restaurant, right? And it's very similar. They have like a letter attached to it, and so you can see it on the wall in the window. It's like, oh, it's A rated here, so we don't have to worry about it. So that was part of my presentation, is I would get into the and it kind of depends. Some people, this was a big deal. There were certain prospects out there where if they didn't recognize the name of the life insurance company, it kind of triggered them a little bit. Well, who is this? Who's Foresters? I don't know who Foresters is. Like, what is this? Well, this is a AM Best rated. They're A rated, so that means they're very financially stable. You shouldn't have to worry about your policy changing hands, because that sucks. You don't want to sign up with someone that's super cheap. The company goes bankrupt, and then all of a sudden a different carrier's picking up the policy. Now, mind you, it is state regulated, so that benefit is guaranteed. So someone will be picking up that benefit. That's how I've always understood it to work. I've never heard of someone signing up for a life insurance policy, paying the premiums for like 10 or 20 years, and then all of a sudden the company goes bankrupt and now they don't have a life insurance policy anymore. I've never heard of that scenario happening. Maybe it has, but
let me ask you a question. This can be my final thoughts. This question.
Okay.
I don't, because I know we're getting close to top of the hour, but I think this is a good question, because let's say there's an agent, and I'm asking this question purely off of devil's advocate, right?
Okay.
Because I think it's a good perspective to look at. Outside, because it is a little different, right? With final expense versus MedSup, the premium's set, right? I mean, it never is going to raise. Premium never goes up, benefits never go down. That's the whole concept, right? It's locked in at the age that they buy it at. Whereas MedSup, the premiums go up. So that's the biggest argument of not getting the lowest price plans. For final expense, outside of it potentially changing hands, let's say there's a senior and they're like, I could give a shit if it changes hands, as long as I'm covered. What is the argument not to just get the cheapest plan?
Why should you pay more for a more reputable company?
Right. Outside of, let's say there's a senior that's like, I understand, I'm with a flaky little company that I've never heard of before, but my policy is guaranteed renewable.
Right.
I don't care if it changes hands as long as I'm covered. What is the argument you think for that?
So part of this is also on the customer. So there's stuff that could come up regarding your policy that you're going to want to be able to reach out to someone. Hey, how much cash value has built up in my policy? Hey, I want to take a loan out against my policy. Hey, I can't pay my premium this month. Can I have my premium come out of my cash value? There's all sorts of customer service related things that you might not think about with a life insurance policy, where you want to know that you can pick up the phone and call this company. Someone's going to pick up that's competent and be able to help you in a timely manner. That's another thing that I think a lot of prospects probably won't even think of. That's, the name recognition is always nice. Hey, sure, I've got a Gerber policy, a mutual policy. You drop some of these names and, you see them light up like, oh, I know this company. And that's nice. But the other piece of it is that you want to know that they're reputable and that they're going to service your client if something were to happen, if something were to come up. If it's some no-name company and they're a brand new company, they've only been around 6 or 12 months, they probably don't have a customer service track record, right? There's probably not a track record of success that can be pointed to where you can be like, oh yeah, they'll take care of you no matter what. Whereas with some of these other companies, these older companies, these more, financially stable companies, you can feel good about that when you're placing a senior with that company. That was always something. I think there's kind of a middle ground to this. There's the brand new companies where it's like you've never heard of them. The premium's almost too cheap. It feels weird. And then you have these other companies at the top end where you're like, this is crazy. Why are they charging this much? I always kind of found there's middle of the pack where, the premium's more reasonably priced. And then the underwriting's a whole nother piece of this as well, where, I want to get you that level day one coverage, Mrs. Jones. So premiums a part of this, but if one company's cheaper but won't give you day one coverage, but this company will, let's get you with them. So I think there's a lot of variables to it, but at the end of the day, does anyone feel good about working with a brand new company that has no track record of success? Like, that's just kind of spooky. It doesn't matter what. I could be buying tennis shoes. If I've never heard of the company, I'm like, you know,
I might not pick them over Nike. Big baller brand over. You don't buy that over Nike.
That's right.
No, I think that's a great answer, and I thought it was just an interesting question because it comes up from time to time.
For sure.
Your final thoughts? I kind of forfeited mine with that question.
You forfeit. Don't be scared of the final expense market. I think some agents who came in on the health side who've never written a final expense policy, again, we mentioned this before. We did a poll in the group a while back in the 7-Figure Medicare Agent Facebook group. Hey, do you guys want to hear more about final expense? Do you guys want more content around final expense? About a third of you said, no, I don't want it. A third of you said, I've never written final expense. I would love to know more about it. This is interesting to me. And another third just didn't really have an opinion, or you're just kind of sitting on the sidelines. So don't be scared of it. What I can tell you is that it can be a great income source. It can be a great way to diversify. You know, like I mentioned on, I think it was yesterday's pod, there's a lot of people right now who were chasing the dual market who are now chasing final expense right now here during the off season, because it can be a great way to grow your book. You have someone now you don't need permission to contact. They're already doing business with you, and you can reach out to them and set them up with their Medicare policy down the road. Mm-hmm. So don't sleep on final expense. You know, even if it's as simple as just telling prospects as you're going, hey, if you ever need anything regarding funeral insurance, final expense, burial benefits, whatever terminology you like, I think even just mentioning it can be super beneficial. So those are my final thoughts on episode 116. We did it. 116 episomes.
Sweet 116.
You're on fire today. Look at you. Look at you.
Appreciate you guys watching all the way to the end, and appreciate you definitely getting through the first part of that podcast this morning. We had to go through it. We had to talk about it.
There was no way.
Other option.
No way around that. Had to go right through.
Right through the storm. As we determined yesterday, going right through the storm, matey. A little bit of that. If you were so inclined to be a pirate captain of a ship.
Yes.
With a wooden leg and eye patch, the whole 9 yards. Anyway, thank you guys for getting all the way to the end. We certainly appreciate it. Whatever platform you might be listening to us on, whatever capabilities it allows you to do, whether it be commenting, subscribing, making sure that you're liking, maybe even potentially on some platforms giving us a 5-star review. We certainly appreciate all the support that you guys are providing. Wishing you guys nothing but massive, massive success. And we'll see you on the next episode of the 7 Figures or Bust podcast. See you next time, everybody.
Happy selling.